So obviously there's a big problem in the condo market right now. There's thousands of completions coming up right now where people paid way more than what they're worth. There's people who already completed, and everybody's talking about this right now and how bad this situation is. And I had somebody reach out yesterday that was like, hey, everybody's talking about this. Nobody's talking about the solution. And they kind of gave me a little glimpse into their situation right now. And I guess they wanted some insight. So I'm obviously going to keep that person anonymous, but I'm going to talk about this situation and give my opinion on it. So this person told me that they had roughly a $95,000 deposit that they put down. And they didn't tell me the purchase price. I didn't want to go too much into the details, but I'm assuming that that would be a 15% deposit, because at a $95,000 deposit, if it was 10%, that would mean that they purchased a $950,000 condo, which is very unlikely. And it's also unlikely that they put 20% down, because that would be, a $400-something thousand condo. So I think it's probably a 15% deposit, and they paid $635K. And they told me that they had an offer, but they'd basically lose their entire deposit. So I'm guessing it's worth probably about $540,000. They probably bought a one bed on a higher floor, maybe a one bed in den or something like that. So if we look at the numbers, basically what they wanted to know is like, should I sell this or should I hold on to it? And I'm not going to give you the answer, but I'm going to show you the numbers and the things that I think about and maybe what I would do, right? So a condo like this, let's just say very rough numbers, today rents for $2,200. When we look at the mortgage, because you have a mortgage on $635,000, even though it's worth $540,000, right? 30-year AM, monthly 4.24%. You're probably going to be a little bit higher than that now, to be honest, maybe like 4.35 or something like that. Your monthly payment's going to be $2,500 a month. Your strata fee is probably going to be a little bit more than this. I just used, maybe the unit is 700 square feet, 50 cents a square foot. You're at $350 a month, but maybe the unit's 660 square feet and it's 60 cents a square foot. Maybe you're around $350 a month for the strata fee. Insurance, roughly $100 a month, maybe 120, but somewhere in that range. And then property tax, roughly $150 a month. Your negative cash flow is negative $900 a month out of pocket every single month. But this isn't your net. This is your net cash flow. But when we talk about net worth, you also have principal pay down. So I ran this on a amortization calculator, and in the first year, you would pay down $8,500 worth of principal. So, what is that on a monthly basis? 8,500 divided by 12 is $708. So this $900 is actually going to be roughly $200 net, but you have to pay $900 out of pocket every single month. Now, there are a lot of people who are, trapped in condos where the cash flow is way worse than this, like negative $1,500 a month. There are people where the cash flow is only negative $500 a month, but I think negative $900 a month is kind of right in the middle of what a lot of people are experiencing. So what do you do if you're in this situation? Well, I'll tell you right now, the reason why pretty much nobody's talking about the solution is because there is no good solution. There really is no good solution to this problem. But I'll give you some insight as to what I'd probably do. If I had a high enough income where this $900 a month was just another bill, right? Because there's people out there who make enough money where it's like, oh, it's just another bill. They don't even look at it. It just comes out of their bank every month. They don't even check it. It's just a bill, right? If this is just a bill to you, I would just hold on to it, forget about it. I think there's a decent chance that the condo market could be somewhat good by mid-2027 because there's not a lot of completions slated for 2027 onwards. But more than likely, it's probably going to be mid-2028. Would probably be the earliest that the condo market starts getting substantially better, right? There's a lot of things working against you right now. High inventory, more inventory completing this year, and also record high, record high purpose-built rental completions over the next couple of years. It's going to keep rent growth probably stable, potentially even cause rents to go down a little bit more. So if you're holding this condo for the next couple of years, I would expect, basically no gains, nothing good to happen, possibly even the price to be lower in 3 years than what it is right now. But again, if I had a higher net worth, or a higher income, I would just hold on to it, pay the bill, and then like write it off against my income for the year or whatever on my taxes, right? If I was somebody that was stretching myself every month to make this payment and it was causing me mental stress and I had to, dedicate so much mental energy to this problem every single month, I would sell it and take my big fat L and go and take that money, if any at all, and do something else with it. Even if I got no money whatsoever, I'd probably take my big fat L. And the reason being is like, if this situation gets worse, you may not be in a position to take that L 6 months from now, a year from now, right? Like, what if the prices go down and now you have to bring cash to the closing table if you want to sell this 8 months from now? What if rents drop? What if your tenant stops paying you? What if the prices, the rents, and your tenant stop paying you all at the same time, right? Now you're gonna be in a situation where you might have to sell your principal residence to cover the losses on this condo, right? And I know that probably hurts to hear. I wish there was a better solution, but unfortunately that's just kind of what it is, right? You're stuck between a rock and a hard place. Now, it is okay to lose money. It's obviously a lot of money, but I mean, people lose money all the time, right? I mean, this is investing. People lose tons of money all the time, right? So you're definitely not alone if you're somebody who's going to sell some real estate and lose a bunch of money, right? It's happening every single day right now. It's happened a lot in the past. That's a part of investing. That's the risk. That is the downside risk in investing, is that you can lose money. It happens. And it's okay to lose money. Now, in this particular scenario, if you've already closed on the condo, there might be another 5% in equity there. Maybe after you pay realtor fees and all this stuff, you've got, let's just say $10,000 cash you're pulling out of this condo. So basically your whole down payment's gone, but you got 10 grand. So just for fun, let's do this investment calculator. All right. So let's just say you're going to hold this condo for the next 3 years with no growth. Okay. Versus pulling it out and investing in like the S&P or something like that. So let's just say you take that $900 cash flow, you invest it monthly. You have an initial investment of $10,000, which you pulled out of that condo. Let's just go get rid of this tax rate. Inflation, probably 2%. It's just nominal dollars. So in 3 years, you would have $51,000, which is a lot less. That's about, less than half of the down payment that you put into that condo. But keep in mind, this might be a better play than holding on to that condo, because you might lose, you're losing basically negative $200 a month holding that condo. And that's excluding maintenance. Like if you need to make any repairs, plumbing, that's excluding if the tenant doesn't pay you for a month and you need to find a new tenant, like vacancy costs. That's excluding if the price of the condo actually goes down. This is just like if you can get 10% and you invest that $900 a month in negative cash flow, you at least have $51,000 back of the amount of money that you lost. But yeah, it's really tough to say, there is no good solution to this problem. But to reiterate, if I was somebody who had a high income and this $900 a month bill didn't bother me whatsoever, it's not even something that I thought about, I would just hold on to it, right? And just let the tenant pay down the principal. Maybe I'm wrong. Maybe interest rates get cut and all these things happen and we're back in a bull market by, early 2027 or late 2026. And then great, you're in a position to capitalize on that. But if I didn't have that high income, I would probably take my big fat L, because if you're not in a position to stomach the situation getting worse, well, the situation getting worse could become a lot worse for you and cost you a lot more money and cause you to liquidate other assets and other things, or potentially lead to bankruptcy, depending on the situation that you're in, right? So if you can get out now, just, not having to bring additional money to the closing table, and you can just walk away and take your L, I would probably consider doing that. And I'm not telling you to do that. I'm just saying that's, what I would probably do if I was in that situation. I hope this helps. If it does, please like and subscribe. If you want to chat with me about buying or selling in the Fraser Valley, you can book a time to chat with me using the link down below. I'm that Agent Kelly. I'm making moves to move you. Peace.